Okay, welcome back, fail-safe investors. I hope everyone had a blessed Memorial Day weekend and was ready to come back to work during the work week and get started and get ready for this hot summer we're about to have in the stock market. We don't know what can happen. It can go up, it can go down, but it's a roller coaster. And hopefully we can ride it out together and see what happens. Let's go. Let's go. My most recent videos, I've announced that I'd be like pretty much doing a list of like growth stocks, value stocks, undervalued stocks, and stocks like that. And I just pretty much put them out there for you to look into and just give you my opinion on these companies. So we're pretty much going to kick this one off with 3 undervalued stocks. Yes, 3 undervalued stocks, or stocks that I think are undervalued, and I'll pretty much try to give you my best explanation for why I think these companies are undervalued. And some of these are self-explanatory. So let's kick it off. So the first company that I feel is undervalued, I don't think this is a growth stock. I don't think any of these are growth stocks really. They're pretty much more speculative stocks, and pretty much stocks have to be popular for them to like pop. And some of these stocks are popular and some of them not. Some you might know, some of them you don't. But anyway, number 1 stock is gold. Yes, you heard me, gold, or Barrick Gold to be exact. And the ticker symbol is actually gold. It's GOLD, Barrick Gold. Now, if you look at the chart, you will think that this company is overvalued. But looking at a couple metrics, I'm going to tell you why I do believe that this company is undervalued. So first off, they have gold mines in every country where gold is prominent or prevalent, or pretty much where you can extract a lot of gold. They have gold mines pretty much in a lot of countries. Argentina, Africa, Zambia, a lot of countries, they have gold. So they're pretty much everything gold. Gold is a commodity. Gold usually rises in value in times of a recession, depression, or anything like that. So if you were already thinking about getting into gold, it's not a bad move. I'm just saying that this company would be a way to get into gold and profit off of gold without having to actually go out and get your hands onto actual gold. This company pretty much deals in everything that is gold. So gold, right off the back, ticker symbol GOLD, is selling for around $23 a share, which is up from last year, if I'm not mistaken. But what pretty much caught my attention about gold is, other than the shiny, what pretty much caught my attention about gold was that it has a market cap of $43 billion. It brings in a revenue of $10 billion, employs 22,000 employees. But 2 things that really caught my attention, I'm like, okay, yeah, this company is definitely undervalued. One was the price to earnings. It's selling at a multiple of 10, pretty low. Even in times like these, like a lot of companies have bounced back from those market lows in March, but not every company has bounced back. This company is selling at a multiple of 10, which means that it has an earnings per share, because in order to have a price to earnings, you have to have an earnings per share. Its earnings per share is like $2.41, which is pretty good, because even in the first quarter, when a lot of companies were reporting losses, it still reported a positive earnings in the first quarter of 2020. So that was good also. And then they still pay a dividend of like 1% even today. So they're pretty much like a huge mining company. They mine gold. Gold is what they do. They're everywhere. Their price to earnings is low. Their earnings per share is pretty solid. They've grown their revenue from last year. They employ like 22,000 employees. Their income pretty much is going up. And they still pay a dividend even right now. So I definitely would say that this company is undervalued. Now, I wouldn't say get into this company because you're expecting a big boom, but this would be a nice way, like I said, to get into a company. You can collect the dividend from it. You can probably swing trade it, meaning like buying at 23. It goes up to probably like 30 or something like that. You sell it off, whatever you feel. But it's just a company that I feel is undervalued, and I share with you. It's not a popular one like a lot of people have been talking about, these tech companies and health companies. I'm just gonna say, honestly, I think those are fads, and they'll probably be gone as soon as they come. And 9 times out of 10, if you're buying a tech or health company right now, you're probably overpaying because the market has bounced back significantly on those sectors. So you're not really buying those at a discount. I'm trying to give you companies that you can buy right now at a discount and have some type of form of like growth in that company, or expected growth, as I could say, with that company. So let's get into stock number 2. Now this is also a company that you might know well or might be familiar with. Delta Airlines, ticker symbol DAL. Now, Delta Airlines, last I checked, was selling in between $20 and $26 a share. But what is beautiful about Delta Airlines is their market cap compared to their revenue. And this is where things get beautiful. And this alone would say that this company is undervalued. So listen up. Delta Airlines, ticker symbol DAL, has a market cap of $16 billion and has a revenue of $45 billion. So that right there alone should tell you that this company is significantly undervalued. And I don't even have to tell you about Delta Airlines. Yes, they are an airline industry, is implied in the name. Airline travel isn't going anywhere anytime soon. Delta Airlines is the most profitable United States airlines. They own a 49% stake in Virgin Atlantic, which is also another profitable airline based out of the UK. They also have a partnership with American Express where they are expected to receive $7 billion from that partnership in 2020 and 2021. Now, a lot of people are still using American Express. And in 2019, they received $4 billion from American Express partnerships. So you got to look at it like that. They have deals pretty much, but just the market cap to revenue alone says that this company is definitely undervalued. Right before the market took a huge dip in March, Delta was selling for around $60 a share, just out of nowhere. And you have to remember, nothing fundamentally about this business have changed. Delta Airlines didn't do anything. This is just existential circumstances that just happened to happen. And once this is over, which they're expecting like 3 years for this to go on, once this is over, they expect business to go back to usual. So buying Delta Airlines right now, $20 a share, when the market cap is $16 billion, revenue billion is $45 billion, price to earnings is at like a 4. The price to earnings growth is at like 7.79, not 79, 0.79, which is undervalued because a 1 is fairly valued. Anything under 1 is undervalued. Everything about this company pretty much says it's undervalued. So that's an easy one right there. Yes, you buy Delta right now like within the 20s and continuously buy Delta in the 20s for as long as it's in the 20s. It doesn't matter. You have to have a long-term view as long as you're buying Delta while it's in the 20s. And then eventually there was a possibility it can get back up to that $60 a share market price. But for right now, I definitely would say that this is a steal at the price of like $26 a share. Even if it goes to $30, $40 a share, it's still undervalued. It is still a steal. A steal. But let's get into stock number 3. Okay, so stock number 3, and some of you people might not know this stock personally or probably never even heard of it, but it's called DaVita, ticker symbol DVA. So DaVita, yes, DaVita is in the healthcare industry or the healthcare sector. So pretty much DaVita deals with like kidney dialysis treatments, and not only like in hospitals or clinics, they also do like home visits, but they operate globally. And I would definitely say that DaVita has some similarities to like the reason why Delta was undervalued. So DaVita, ticker symbol DVA, is selling for around like $77, $78 a share right now. But they have a market cap, which is like a medium market cap of like 9.5 billion, but their revenue is 11 billion. So that's crazy. And then their projected earnings growth is like 0.94. And then they're selling for a price to earnings ratio of around like $13 a share. So there are a couple metrics about this that's definitely like undervalued, and you are getting it for a deal. One thing that I should mention, and I don't know why you need to know this, but this is something you should know, is DaVita is owned by Warren Buffett, or Berkshire Hathaway, I should say. 31% of the shares, DaVita is owned by Berkshire Hathaway, which is Warren Buffett's company. So that's also a good thing. That is a great institution to have ownership of your company, because Warren Buffett has like $135 billion or more, something like that, just sitting on the side in cash. So DaVita now, if something happens, he can fund it. But being that deep into DaVita, I don't think he's just going to sell all of those off or sell those shares or sell that company, because technically, according to the SEC, he would be considered the owner of the company. He would own that company. But DaVita's in the S&P 500, so that means it is a company that is expected to be around for a long time. Pretty much the point I'm trying to make is DaVita's undervalued. You are buying it at a deal. It is a healthcare company. They will be around for a while now. As long as people need dialysis, they will be around. It's a big company. And if you enjoy this video, if you want more videos like this, hit the like button, hit the subscribe button. If you haven't already subscribed, leave a comment down below. If you want to see more companies like this, you can DM me on any of my social media platforms, talk to me personally. I don't mind giving advice or my opinion on the company, or even looking into a company for you right now while I have the time. But these are just 3 companies that I think are undervalued, and the possibility of you losing your money in the long term in these companies are slim. And that's what I'm going to say. I'm going to leave it at that. It's just slim. So the upside outweighs the downside if you invest in one of these 3 companies, in my opinion. Now, I'm not a financial advisor. This is just what I found just looking through like certain indexes and things like that. If you have a company that you believe is more undervalued than these, let me know. Till then, good luck with your future endeavors, and let's do it.